I want to talk to you about SoFi versus Upstart versus Achieve personal loans, and we want to quickly compare and contrast those three personal lenders to see which one is best for you this year. So here are the top loans I want you to really think about. First of all, let me start with SoFi. So when you think about SoFi, I want you to think about a fintech that actually offers online personal loans with consumer-friendly features for good and excellent credit borrowers. But also, if you have bad credit, you can also qualify for SoFi, not a problem. SoFi, by the way, stands for social finance. So they will actually will look at your loan application if you have a FICO score of 500 minimum. 500 minimum. So when you think about SoFi, think about a lender that allows you to have a joint loan application. You have multiple rate discounts. You have a mobile app to actually manage the loan. So that's really good. On the flip side, there is no option to choose your initial payment date, and you also have a high minimum loan amount. Why? Because SoFi actually gives you $5,000 all the way to $100,000. SoFi is one of our favorites on this show because it is a very generous lender. I mean, $100,000, you don't have a lot of players at that level. I mean, you have maybe you have a live stream, of course. You also have Wells Fargo, but that's really it. Okay, you don't have a lot of players. So $5,000 to $100,000. Now you might be thinking, well, $5,000 that's a little too high as a minimum loan amount. It is. So if you don't need to have to actually borrow $5,000, then don't go with SoFi. SoFi also charges you actually an origination fee. Origination fee up to 7% of the loan amount. So that's really that's disappointing. But hey, listen, it is what it is. A lot of those fintechs that offer personal loans, they do that. I mean, they charge you all the way to 10% as origination fee. But overall, what you will love with SoFi is that you have joint loans, multiple discounts, hardship assistance, mobile app to manage the loan, and you also have the ability to actually have same-day funding, so you can get your cash right away. That's really good. And the loan is actually available in all 50 states, which is not the case for some lenders. I mean, some lenders will only cover a few states, but SoFi has been able to secure a banking license in all 50 states. So that's really good. So fantastic. And again, minimum FICO score 500. So when you think about a SoFi personal loan, how do you apply for this loan this year? I mean, SoFi is really flexible here. First of all, you want to pre-qualify for a SoFi personal loan. Never actually apply for a SoFi personal loan without pre-qualification. In other words, you want to go through the soft pull process first before going through the hard pull process. Okay, that way you actually are doing three things. Number one, you can really save a few points off your credit score. That's number one. Number two, you can see how much you could qualify for. And number three, you are able to keep your options open. Like if SoFi gives you options, if SoFi gives you pre-offers and you don't like what you hear, you can just say, you know what, I'm not interested in applying for a SoFi loan now. So this flexibility is really good. So you always want to pre-qualify for a SoFi personal loan on the company's website or through the app, through the mobile app. Okay, that's what you want to do. And so once you actually pre-qualify, if you like what they offer you, hey, listen, you can just accept it. If you don't like it, not a problem. Okay, that there's no commitment from you. Okay, and so once you actually, if you're satisfied with the loan offers that they give you, and you are able to choose one that fits your budget, then you can just submit your formal loan application, like your W-2s, your pay stubs, your bank statements. So this is kind of cool. And then one thing I want to say that you need to have a bank account to actually qualify for a SoFi personal loan. If you don't have a bank account, you will not qualify because they have to link your account information to your checking account information. Okay, but if you don't like SoFi for some reason, you can try Upstart. I will speak about Upstart later on, or you can try Achieve. Or you can even try Livestream. So Livestream is actually good. I was speaking earlier about Livestream being a very generous lender. Also, in terms of the maximum loan amount that they give, Livestream will give you $100,000. But Livestream is more on the high end when it comes to credit score. Livestream would not approve you if you have a 500 as a credit score. Livestream, by the way, is a unit of Truist Bank. Okay, so it's actually the online arm of Truist Bank. I want to talk to you now about Upstart. So when you think about SoFi, of course, you got to think about Upstart. But Upstart is a different player. Why? Because Upstart will give you a loan from $2,000 to $50,000, not $100,000, because Upstart want to limit they want to limit their exposure. So Upstart is kind of similar to SoFi in the sense that it is actually a fintech, okay? But Upstart is actually better than SoFi in the sense that, better in some sense, in the sense that it accepts borrowers with bad credit or thin credit histories, has a low income requirements, you have fast approval and funding. They do allow also to have a secured loans, and you also have the option to change your payment date. But Upstart, kind of similar to SoFi, charges you an origination fee, so you have to pay anywhere from 1% to 9%. So there are no rate discounts. There is no joint or co-sign loan possible, no loan option possible through Upstart, and you also have no direct payments to creditors on debt consolidation loans this year. So this is something to really think about, okay? But the bottom line here is that basically when you think about Upstart, think about an online lending platform that connects you with banks and credit unions to fund personal loans, and it really differentiates itself from other online lenders with its underwriting model that uses artificial intelligence and non-traditional data like college education and work experience to qualify you as a borrower. So that's really good, okay? And so if you think about Upstart, I want you to think about flexibility from that point of view. As long as you are willing to you're comfortable with the origination fee, you should be good to go. Having up to a 10% origination fee, that's kind of high, but hey, listen, it is what it is. And one thing I want to say also is that you have the option, and this is big with Upstart, you have the option to change your payment date. So while borrowers cannot pick their initial due dates, they can change the dates one time every 12 months during repayments, as long as the new payment is within 15 days of the original due date and the loan meets certain criteria. So this is kind of cool from a flexibility point of view. So when you think about Upstart and you think about the personal loan, what kind of a loan like use of loan proceeds can you contemplate this year? Well, Upstart is pretty flexible when it comes to the use of loan proceeds. You can use an Upstart loan for all kinds of all kinds of initiatives, if you will. You have debt consolidation, home improvement projects. You can have emergency expenses, medical and dental bills, vacations, weddings, funerals, business expenses, vehicle financing, moving expenses, taxes, other large expenses. So that's kind of cool. Remember, the maximum loan amount here is $50,000. $50,000, okay? And the cool thing also is that you are able to get things done a lot faster. What I want to say is that when you think about Upstart, I want you to think about $2,000 to $50,000, but I want you to think about a lender that's more that's flexible in terms of the income requirements. So they will take you if you are making at least $1,000 a month. $1,000 in terms of gross income, okay? That's really important to keep that in mind. So to be eligible for an Upstart personal loan, you must be a U.S. citizen or a permanent resident living in the States. You must be at least 18 years old. You must have a valid email address and social security number. You must have a full-time job or a part-time job. You must have a personal bank account. You must have no bankruptcies in the last 12 months. And you must have no current delinquent accounts on your credit reports. And you must have fewer than 6 hard inquiries on your credit reports in the last 6 months, excluding student, auto, and mortgage loans. So this is something to really think about. And so overall, Upstart is pretty flexible in terms of giving you the possibility to apply for a loan. But again, I want to really explain to you the fact that Upstart is going to be better than let's say Lending Point, for instance, because Lending Point actually is kind of similar to Upstart in the sense that you have a minimum credit score requirement, but also income requirements. But Upstart actually will give you $50,000 maximum, whereas Lending Point will give you $36,500. So $36,500. So the upper range of an Upstart loan is better than a Lending Point loan, for instance. So this is really important to mention here. So I want to talk to you about Achieve here. So Achieve personal loan. When you think about Achieve personal loan, what kind of stuff should you be thinking about? First of all, Achieve is kind of similar to Upstart in the sense that the maximum is $50,000, and kind of similar to SoFi in the sense that the minimum loan amount is $5,000. So that's what it is, okay? And by the way, I should have said that Upstart, you could also pre-qualify for an Upstart loan. So same thing for Achieve, okay? You can pre-qualify for an Achieve personal loan. You just go to the Achieve website, or you can just go through the app, okay? So when you think about Achieve, think about a lender that's really great in terms of pre-qualifying you with a soft credit check. You are able to get a loan without prepayment penalties, so that's really big. The fact that there are no prepayment penalties, that's really huge. And it offers loans to borrowers with fair to good credit. So Achieve will start you at 500, that's the FICO score, and you can get discount for applying with a co-borrower, letting Achieve directly pay your creditors, or for having retirement savings. So that's kind of cool. That's really good to have this in mind. And on the flip side, Achieve's interest rates and origination fees may be higher than those offered by other lenders. Loans generally have a high minimum amount of $5,000, which may be more than you need. And same-day funding is not available, but most loans get dispersed within 24 to 72 hours. So if you want your loan real fast, Achieve might not be the like if you want like super fast, Achieve might not be the lender for you. Okay, but overall, the application process through Achieve is pretty straightforward. Okay, they'll ask you first name, last name, your social, your like proof of income, your employment status, proof of identity, also like a government ID, issued like photo ID, for instance. But you also have to have a bank account. That way, Achieve knows how much you're making, and also your cash inflows and cash outflows. Very important to think about that. But the cool thing is that when you think about Achieve, think about ease of application process, helpful loan officers, okay? But some people complain about funding delays, but also transparency issues. So when you think about an Achieve personal loan, like criteria for approval, for loan approval, of course you have credit score and financial history. So credit score is 500 minimum. Financial history, basically you want to have a DTI, debt to income ratio of 40 to 50%. Okay, that's really the maximum that Achieve wants to have. In terms of income and employment, Achieve wants you to have a job for at least 3 months to qualify. In terms of income, you are looking at $15,000 gross income every single year. Okay, so that's really important. And you also have to specify why you need a loan from Achieve. So the use of loan proceeds. So Achieve wants to have wants to make sure that you are like using the loan for credit card debt consolidation, moving expenses, vacation, and hard to finance purchases such as a wedding, home renovation, or medical procedure. Achieve is not going to finance post-secondary education expenses such as college or vocational tuition, or to refinance your student loans. Okay, so that's important to really think about it. And so you do have loan origination fees through Achieve, kind of similar to Upstart and SoFi also. Okay, but Achieve has a lower loan origination fees because the maximum that Achieve is charging you for loan origination fees is actually 7%, whereas it is 10% for Upstart and 9% for SoFi. So right there, the delta is pretty interesting. And but you have to really remember the fact that Achieve allows you to pre-qualify. So you always, by all means, you want to go through the pre-qual process. You want to see through the soft pull what kind of offer you have. Okay, this is important. And if for any reason you do not like what you see through Achieve, you can try Livestream, you can try SoFi, or you can even try regular institutions like credit unions like PenFed or NavyFed, for instance. Okay, that way you can see you can actually explore other options in the market right now. So what are the facts here? When you think about SoFi versus Upstart versus Achieve, what kind of a strategy can you have? I mean, before I give you the final choice, I want to really give you a clear idea about choosing a lender. I mean, this year, it's important to really, first and foremost, you want to really start by looking at the lender reputation. In other words, go read a little bit of reviews about the SoFi in terms of reputation. Do the same thing for Upstarts. Do the same thing also for Achieve. Read about the reputation, and you want to pay attention most importantly to the negative reviews. What kind of negative reviews? What kind of complaints people are putting online? Okay, and you want to watch shows like this one, and you want to really learn more. So the reputation is really important because everything starts from there. And then you want to compare interest rates and fees. Don't think the APR is the only fee, the only charge that the lender is actually applying to your account. As a borrower, you got to really think about the penalty, like other penalties. You got to think about early payment fees, origination fees, and so on and so forth. Okay, so that's really important to think about it that way. So you also want to pay attention to the lender flexibility. Flexibility in terms of modification procedures, hidden fees. You want to examine the agreement for concealed charges that may not be immediately evident. You want to think about consequences of defaulting, like if you were ever to fail to meet loan obligations. You want to really understand the repercussions. You do not want to be there. You do not want to go there anyway. But it's always important to have a clear idea about how flexible the lender is. Okay, that way you know how to cover your ass, so to speak. So one thing I want to say also is that when I speak about you choosing SoFi between SoFi, Upstart, and Achieve, you also have to pay attention to the loan amount. What's the maximum loan amount that you can have through SoFi, through Upstart, through Achieve? So when you think about the maximum loan amount, you also have to think directly or indirectly about your ability to repay the loan that you are about to get through the lender, right? Because if you were to be approved for $100,000, the amount of cash back the amount of loan payments you are making is not going to be the same as if you are, let's say, you are being approved for $50,000. So be very careful. I want you to think in a scalable manner. You know, whether you get approved for $20,000 or get approved for $80,000, the budgetary repercussions are not the same thing. So be very careful there. So here are the selection here. So SoFi versus Upstart versus Achieve. Which one should you go for? You want to go for, our favorite is Achieve, because Achieve actually allows you to get to qualify for a $5,000 to $50,000 loan. Achieve has a lower origination fees, maximum 7%. Achieve will consider your application if you have a minimum FICO score of 500. So that's really good. So Achieve is also great in terms of customer service anyway. Fantastic. So in conclusion to this conversation, I spoke to you about SoFi versus Upstart versus Achieve. I give you the top loans, the facts, the selection, and the conclusion. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.